four. What's up, guys? Welcome back to the EG Pod Thunder with your boy, the young light-skinned Keith Sweat. Back with my guy to the right, John Bolano.
How we doing, guys?
And to my left, my guy, Nick.
Nice to meet you.
Nice to meet you guys who are viewing in. Nick, do you want to give a little bit of a intro to what you do and describe your title of your job description?
Yeah. So Nick Principe, Princeton mortgage office over on Atwood Ave in Cranston, mortgage lender. You know, we help finance residential real estate. We work with John over here a little bit, and glad to be on the show with you.
And John, I'm glad you're here. And John, you have been on the podcast before. Do you want to give a quick little recap to what you do?
Yes, I am Jonathan Bolano, team lead of the Bolano team over at Realty One Group Executives. I help buyers and sellers for residential, commercial investors in Rhode Island, Massachusetts, and Connecticut successfully purchase and sell property.
Nice. I love to hear it. And those tuning in obviously are interested in the real estate game right now. And this is a question on everyone's mind. We can start off right off the bat. So with these interest rates, Nick, what is your thoughts? People are scared. Should I hold on to my money? Should I wait a couple months? What are you? That have to be the number one question, right? For you, between you guys,
it's been one of the
you
tough
guys
ones
getting
right
in.
now.
Pretty much, yeah.
So interest rates are crazy right now, Nick. Why should I buy a property right now and not hold on until the interest rates drop?
So I mean, they're crazy, but in the grand scheme of things, they're not. The interest rate today is the best rate you're going to get, right? I mean, if you lock in today, you close on a house today. Let's say your rate is 6.5%. If rates go up, awesome, you're in a great spot. If you close today at 6.5% and rates go down, awesome, you're in a good spot. You refinance and get whatever the market rate is at that time. Mm-hmm. Really, what you want to focus on today is the value and how they're still projected to increase over time. You know, you can always change your rate, like I said, to a refinance, but you can't go back and change what you paid for the house. So let's say you're buying a house today for $300,000. In 2 years, if it's worth $320,000, and you wait the 2 years, it's an extra $20,000 out of pocket, as opposed to buying today at 6.5%. And maybe refinancing in 2 years down to 4.5%, whatever that might look like.
At a much lower price as well.
Absolutely. So it's more so, go off the numbers that you have in front of you today. If you're comfortable with them, regardless of what that rate is, that the payment is the payment. And, make a decision based off of that.
So who's hearing that question first more than anything? Is that going to be you as a mortgage lender, or is that going to be John as the real estate, agent? Or is it both of you guys? You guys get consistently hounded by that question.
I'd say that it's probably both of us equivalently, because unlike back in the day when we didn't have social media, we do have that now. And so people are over Nick and over myself probably about equivalently at this point.
Yeah, agreed. I mean, it's every buyer I talk to, it's like, hey, where are rates going? If it drops throughout the process, can we get the lower rate?
Right.
What are we going to do, et cetera, et cetera. I mean, it's a nonstop topic.
Are you think people losing out on house? Like, do you think people are losing out on their dream house because they're overthinking the interest rate at this point?
Absolutely.
100%.
Yeah.
Because at the end of the day, even if the interest rate is 20%, when you rent, you're paying 100% interest all the time. And what that means is that you're never seeing a dollar of that back. And I'm going to say that again. You never see a dollar you put into your rental back into your pocket. However, in a purchase, there's at least a probability that you're going to at least make equivalent, if not more, than what you had before.
So you're shaking your head, Nick. So do you agree with that statement as well?
For sure. I mean, let's say equal payments, right? You have especially where rents are at nowadays, right? For a 3-bedroom apartment in a decent area, you might be paying like $1,800, $2,000, right? So let's call it $2,000 for a round number. That's $2,000 a month going towards someone else's mortgage or a rent payment, right? If you live in that place for 3 years, that's $36,000 that you just laid out of pocket with nothing in return. Let's say that same house, you own it and your mortgage is $2,500, right? Or even let's call it $3,000. Same time period, 3 years. At least when you go to sell it, you're going to get some kind of return on that money that you put into it. So I mean, it's the easiest way I could describe it is your house and your mortgage payments going into it. It's like you're building a big savings account because whether you go to refinance and take cash out of it at some point or sell it down the road, I mean, you're going to get some level of equity back versus the rent.
100%.
Big savings account though. So okay, so yeah, I'm not seeing that money back when I rent for somebody else, but Nick, I am interested in buying a house, but I'm scared about, I'm giving all my money down for a down payment. How do you react to someone who's saying that to you?
You don't want to drain your bank account down to zero, because when you go to buy a house, you're gonna have to, typically, maybe let's say about a new construction, right? And let's say you got to put down a minimum of 3%, right? You want to have some kind of savings for something that may happen down the road, even if it's just buying furniture, right?
Mm-hmm.
So, someone has 20,000 in the bank and it's going to cost $18,000 to get into the house might not be the best situation for them. So you just got to analyze your finances appropriately and know what your saving habits are and make your decisions based off of that. But that's a conversation we have with everybody day one. It's, hey, what do you want your out-of-pocket expenses to be, and what do you want your leftover cash to be, so that you're comfortable day one when it's time to make that first payment.
And to take that to the next level, one of the things that Nick and I do when we are meeting with these clients is we find out what their max pre-approval is. So let's say they're approved at $500,000, and then while Nick's having the conversation, I don't get to know this stuff, but Nick has the conversation of what can you afford as far as out-of-pocket and so on and so forth, and then they determine what your affordability amount is. So you're approved for 500, but you can only afford 300 to 350 without going house poor, because you put all your cash down into the property. And it's something that's survivable, something that you can continue on. I forget the word, but it's just something that you can continue to maintain. Then you come over to the realtor, aka myself, and you say, hey, John, I'm approved for 500,000. However, 300, 350 is about my max. I do not go higher than that. And then I set up a search so that way they stay within those confinements. But when we do try to go under contract and we do start submitting offers, we actually try to stay about $10,000, $15,000 below that anyways. So now you have multiple buffers in there. So that way, if you find the home of your dreams, boom, let's go to the 350. Other tthan that, let's stick to the 315 and below.
So you're saying approved for 500, but trying to stick around 350. But wouldn't you be telling them the absolute what you can spend or what you can't spend?
Yeah. So we always talk about in terms of hey, on paper, this is what the mortgage guidelines say you can afford. Mm-hmm. Contrary to popular belief, it's somewhat easy to qualify for a mortgage in terms of a high amount. Most people that I speak with, they're qualified for much more than they actually want to spend, right? So that $500,000 purchase price and they're in payment, let's say that's like a $4,000 payment, right? Someone's like, okay, yeah, on paper I can afford that, but in all reality, they can't. So it's like, okay, so we backtrack it and reverse engineer. And we say, you want a payment of $2,500. Okay, so based off your loan type, what you're putting down, we got to get you in a purchase price of around here. And then that's where John and I work together to make those, those numbers talk to each other and have everything make sense.
Mm-hmm.
Have you ever dealt with somebody who you tell them, hey, 350 is your max, and they get upset with you and they want more?
Oh, yeah. Yeah. It happens. You get both ends of the spectrum. And sometimes there's, actual cause for that, right? It could be their parent or sibling or something might be moving in with them, and they know they can count on that income to help out with that mortgage payment, but they're not going on the mortgage, so we can't account for that in terms of their qualifying. So it's, they know they'll have the extra funds, but we can't account for it if they're not on there.
At that point, why wouldn't that person want to add their brother or the other sibling to the
or even significant
mortgage?
other?
There's a million reasons. It could be, let's say it's a sibling, right? And maybe their sibling wants to buy a house of their own down the road. They know that they can't go on that mortgage because it could hurt them whenever they go to do it. It could be whoever that other person is. They don't have the credit to qualify on the mortgage. They don't have enough income to justify going on. There can't be a handful of reasons, but regardless of what it is, every now and then we will run into the person who's like, oh, well, I want to, you got me at 350, I want to be at 400. And it's like, the numbers are the numbers. Sometimes you can't really do much with it.
So someone like that, there's no budging on the numbers at all. The numbers, like you said, are the numbers, and that is it.
Yeah, it's black and white. Guidelines are the guidelines in terms of what we can underwrite to. Someone's income is their income, and the loan program's the loan program, and these are the certain percentages of that we can go up to and what we can use, and it either works or it doesn't really.
Is that, just like a Princeton mortgage thing? Do you think other mortgage lenders sometimes can, I don't know at all. Let's ask a question. Like, do you think sometimes people can just bend the rules and just, they want to satisfy their client and okay, whatever, then I'll give you 400,000 and then, sink or swim. I don't care at the end of the day. You want to be approved? I'll approve you.
Yeah, no, it doesn't work like that. Unfortunately, so all of us lenders, we all go by the same guidelines, same rules.
Pay attention here. This is a good one because everyone thinks that they go to different lenders and they're gonna get all of a sudden some better, different deal. This is the tell all right here. This is the thing you want to listen to.
Yes, I mean we all play by the same rules, right? It's the guidelines are in essence set by the government, right? Fannie Mae, Freddie Mac, Ginnie Mae, FHA, VA, they're all government-sponsored programs and regulations. Some lenders have different overlays on it. Let's say like a credit score overlay where X company may say you need a minimum 650 credit score, and we say you need a 600 credit score. Princeton Mortgage, we have no overlays in those regards. So if the guidelines mandated by the government say that you could do it, and you check off all the boxes to do it, you could do it. We go very in depth in terms of qualifying people up front so that they know, hey, this is exactly where you stand from a qualifying perspective. And John and I working together, I think he knows that, like, whenever I say a number, that's the number. And if someone else is saying something astronomically higher or just something kind of funky, they're typically not looking at the same stuff that we're looking at, and there's a reason for it, and it'll get caught on the back end. And what I see a lot is, let's just say I tell someone 350 and someone else tells them 400. Yeah, it's good for someone else to tell you what you want to hear, but after you go under a contract on something and you waste $1,000 on your appraisal and inspection, and then the underwriter actually reviews it and says, oh, hey, you don't actually qualify, then it's like, oh, well, you're really more at that 350 that we originally said.
It's a very noteworthy point because we see that quite frequently where if buyer comes back and they say, oh, well, so-and-so said that I was approved for 400. Let's say the number is like he was saying. But then in addition to wasting that $1,000, because you don't get that money back on your inspection and appraisal, you might get your earnest money deposit back. Earnest money deposit is also called your EMD. And this is the money that you put down on the property when you go to solidify like your contract. You're saying, hey, I'm going to purchase this. Like when you go to buy a car, you put that $500 down that holds the car till tomorrow. In real estate, you put the $1,000 to $5,000 and sometimes more down, and that's called your earnest money deposit. You can get that back. There are ways to do that, but you put $500 onto your inspection. If you have like a single family, you put your $500 onto an appraisal, and that money's gone. In addition to that, though, and the most important thing, because this is the thing that I always hate the most that I see in the market, which is why I work with folks like Nick, is that you've gone now and told your family, your friends, your baby giraffe that, hey, I'm going to go get this. I'm going to get this house. You got your kids excited. You got your family excited. Everyone's all proud of you. And you're like, damn, I just made it. I'm buying my first house. And then boom, the underwriter comes back and says, no, you can't. You're like, what? Right. Nick gets ahead of that stuff. And good lenders and people that are doing the right thing, they're the ones that are going to get ahead of this. And they're going to tell you the things you need to hear versus what you want to hear. And that's something that we need to pay attention to here.
So you're saying good lenders, though. And you said that you guys follow all the same guidelines and restrictions. So how could someone overlook something and give that same client a $50,000 more than what you approved them of? So what are they overlooking that gave them that $50,000 overlook, even though you guys all abiding by the same restrictions?
Right. So the kind of cadence of when you go to buy a house, right? Typically, you're going to talk to a realtor first. Let's say it's John in this example. John's then going to refer you to a lender. Let's say it's me. The lender, loan officer, is then going to have you fill out an online application, pull credit, collect some documents, W-2s, pay stubs, things of that nature. And then, in essence, what the lender is doing is they're making their best guess based off the data given to them and saying, hey, it looks like you're going to qualify for this loan at this purchase price, at this loan amount, et cetera, et cetera. So it's kind of a soft underwrite that's getting done up front by the loan officer. The loan officer does not have the authority to actually sign off on your loan and say, hey, here's $300,000. So when it gets into underwriting, after they go under contract and appraisal and all that is spent, the underwriter then reviews it and says, hey, yes, you were right, they qualify for this, or hey, no, you were wrong. So it kind of comes into experience at that point. It's where, like, okay, some loan officers, they kind of know all the ins and outs and they can effectively underwrite up front where that number is that number. Others are like, others are saying it's like, yeah, well, it looks like you can, you might be able to do this and we'll figure it out, when it comes time to it. There's no worse feeling than telling someone that they qualify for something, they go under contract for it, they get all their hopes up, and they tell their draft, like John said,
Yeah.
and then you have to tell them 2 weeks later, hey, you actually don't qualify, you're not getting that house. So I don't like it. I don't like delivering that news. So we make it a point to not have to deliver that news, and are very, very thorough up front with that loan officer underwrite. And if there's ever a question where it's like, hey, it's kind of dicey, what's going on here, we'll have it get reviewed by an underwriter, the person that's going to actually sign off on it, and they'll say, hey, yes, this works, or no, it doesn't.
Do it up front.
Right.
And that's an important thing as well. Another little quick scary story I'm just going to throw in there real quick. To add to that, we had a buyer. We luckily got it all done and whatnot, but I was on the listing side, and the buyer came with an approval, a pre-approval, like we've been discussing, from a lender saying, hey, we're going to do X, Y, and Z. Well, I called the lender as a listing agent. I said, hey, I just want to talk to you about your buyer. How are they doing things? And it ended up coming out that they are looking to get a gift from a family member, which is fine because you can get a gift as a buyer to help you out with down payment, things of that nature. Nick can go into that later. But I went a little further deeper and I said, that's great. Awesome. Who are they getting it from?
Crickets.
Giraffe.
Exactly.
The giraffe.
It was a giraffe.
That giraffe
it
is
failed
over
us.
somewhere.
Yeah.
No, but that was exactly what happened. And I said, well, how is this buyer well qualified and pre-approved if you don't even know where you're sourcing the fund? Like if you don't know where that money's coming from? And he goes, oh, whoa, no, we're gonna get it from a family member. And I said, a family member? Cool. Which one? Crickets. And so I said, again, how is this a well-qualified buyer and how are they pre-approved up to this number when you don't even know where they're going to get the money for the down payment? And so what they do is they kick the can down the road. I call it, they throw spaghetti at the wall to see what sticks. And there are plenty of those out there. And it's horrible because in essence, they're getting lucky that this loan is actually making it. They're finding the money. They're able to pull all this together, but it's all just like flying by the seat of your pants. And you as a buyer are going through a ton of stress at that point because now you're 2 months, 3 months, sometimes 4 months into the transaction that should only take 30 days and still waiting to find out how are we going to get this together. Now, everybody's stressed out. You're upset, seller's upset, and everybody's all miserable because of things like this where they're saying you're pre-approved for something that you're really not yet. And if you just take another week, another 2 weeks, get all your buttons buttoned up like what Nick does, and get all your I's dotted and T's crossed, the transaction's nice and smooth.
So what's like your thoughts on that type of that story that John just told? Like, is that just someone? How did they get approved in the first place? What was your thoughts on that being the mortgage lender?
Like any profession, there's a lot of good people, there's a lot of bad people within it, right? So it's very easy as a loan officer to just try to sit there and wheel and deal and, say to a realtor, yeah, I can get you a pre-approval in 1 hour. And in some instances, absolutely you can. Most you can't. I tell people, it's like, I can move as quickly as you can get me documents. So it's very easy when you're not doing that. It's very easy to just say, oh yeah, you know what? You say you make $100K. Sure, here you go. Here's your pre-approval. You said you got X amount of dollars in the bank. Here you go. Go have fun. It's kind of funny to think, but a lot of people really don't know what they make. So at least by mortgage standards, which is totally understandable. So what you think you might make because you've made that over the last 6 months, and you see it in your bank account, that might not be what we can use on the mortgage side. So that's why it's important to verify all that stuff up front.
What documents are those? Just to throw that out there.
It varies from person to person, but for the most part, your average Joe, it's going to be W-2s, pay stubs, like to verify income. If we have to get an employment verification up front, we absolutely will. A lot of employers now, we can just verify it right online, and that takes 1 second to do. But it's just really just going that extra mile up front to make sure that everything is as it should be, so that you don't have to tell a buyer 2 weeks into the process they don't qualify, or you don't have to tell the agents like, hey, I know you're just going to open houses for the past 3 months, but they don't actually qualify. So it's just and it's not difficult work. It's really not. It's just a matter of being lazy or not being lazy.
This day and age, though, of technology, have you ever dealt with I'm not sure if you've seen the TV series like Inventing Anna and things along those lines, where she was just essentially the premise of that TV show, which is based on reality. She was just forging documents where she was just photoshopping. She was call my referral, and then her referral would be her with a text now number with a voice distorter. Oh yeah, Anna works here. This day and age, how are you preventing those type of the photoshoppers who can Photoshop a pay stub and things along those lines?
There's so many checks and balances within it. I'm not to say that it's impossible, but and people, I mean, mortgage fraud is a real thing. But there's so many checks and balances that, I mean, it had to be very, very high level to get past it. Like, let's say that pay stub, for example, right? So I could see that pay stub, and let's just say the gross pay says 1,000, net pay is 800. I can then look at that pay stub. It's like, okay, do the taxes being deducted align with kind of, what the percentages are? And the easiest way to look at it is you look at what is it? The Social Security rate is 6.2%. That should be coming out. If you're really questioning it, just do a quick calculation on that. Then you say, all right, so you should have on November 30th a $1,000 deposit going in from this check. Do you see that in their bank account? Their W-2, does that align with their year-to-date earnings versus past years? On the employment verification, are there any discrepancies between that? So, I mean, there's a lot of checks and balances between it. If somebody's forging all of that and somehow inventing Anna in the mortgage world, then, hats off to them. You're doing a good job. But
that was me my next question to follow, because she is a true story. She bamboozled like Forbes top 100 literally investors and things along those lines, right, where they just felt comfortable with her. Like, oh, this girl's a new investor. Let's go into business with her. And they didn't do their due diligence. Do you see that happening? Like, have you ever seen that happening where people are just not doing their due diligence just because something's too good to be true?
Well, yeah, that's kind of what we're talking to earlier, right? It's just, it's like someone sounds good, it just kind of looks good at face value. And it's very easy, again, to just say, yeah, you know what, you're probably going to be good. Let's just, go do your thing. And then 2 weeks in the contract, it's like, oh, well, I'm getting that check in 2 weeks, or I should have the deposit. My family members was going to give me the money, now they're not. So
that being said, so John was saying earlier, the gift. So those who don't know, if you're looking into a house, someone can gift you money. So it's literally just like they're giving you a present, where they're giving you like $10,000 to help go towards like your down payment, things along those lines. So the gifting thing. So say John was my cousin, and John gave me $10,000. What's the situation in that aspect? Does John need to prove to you where that $10,000 come from, or is that just a gift and you don't ask questions at that point?
It depends on the loan type, right? So for a conventional loan, if John's your cousin, all he has to do is write you a personal check. We get a copy of the check. We have you both fill out a gift letter. We see it go into your account. That's the end of it. FHA loan, those same steps, except we also have to see the money coming out of John's account, and basically that check clearing that he wrote you, and we have to see that those funds available for the preceding 30 days of that gift transfer. So if there's any like large deposits or something like that could come into question. So it's on a case-by-case basis in a sense, in terms of what may or may not be needed, and it's really what the loan program is, and what are the situations within that particular.
So when I'm first applying to get a mortgage approval, and I'm telling you, hey, my cousin John, he's going to gift me $10,000. Do you need that at face value, or you're taking my word where I can give you that $10,000 30 days into the process?
So usually we won't have the gift funds transferred before they go under contract, because sometimes people get pre-approved and they never go under contract, right? They don't find the house. But we do try to do some level of verification on that beforehand. We'll usually kind of draft the gift letter and say, hey, can we at least get this signed, and just we'll date it when the time's appropriate. That way we at least know, okay, the gift donor is signing off on it. We know what the cadence is. You can't verify absolutely everything day one, but if you could do like 90 to 95% of it, then everything should go as it should. But a scenario like that, like
baby giraffe.
Yeah, you don't want the giraffe to give up all the money day one.
So basically, in that scenario that you were talking about, baby giraffe said that they were going to give me $10,000. Came down to it, he never gave the $10,000. Then the deal went sour.
Ours ended up closing. We got lucky. But there are scenarios where that does not happen. And that's the thing, that just doing a little extra work, like Nick's been talking about, having that letter signed and having an understanding of like, where's this money going to come from? Shit happens. We all know that. And sometimes you do go into contract and you can have that letter and the person still back out. But at least you went that next level to understand what the game plan was, because technically that's what our jobs are as professionals, as a realtor, as a lender, is to act as the person's guide. You're the center of everything. You're the person that we're trying to help get from point A to the promised land. And it's our job to help put you in path for success. And by not doing those little bit of extra steps, what are we really getting paid for? What are we really here for? We're useless at that point, and therefore shouldn't even have a job. So we go that extra step, that extra mile, because we take our job serious, and that's what we're here for.
Right. I mean, like you got what's the saying? You can lead a horse to water, but you can't force him to drink. You know, like you could tell somebody, hey, don't buy a car throughout this process, but
Shit happens.
someone's gonna go and buy. It happens. You know.
You got the baby giraffe in your ear, and it's just like, go buy the car.
Yeah. So do you think you've had scenarios where you have to lay down that fortunate news where you only pre-approved for so much, and then someone left you, they went somewhere else, got approved for more, and they're in a bad scenario, and it's not kind of like I told you moment. It's kind of like where I was trying to save you to avoid that.
Yeah, and it's happened a handful of times, and I'll tell them, I was like, look, I could tell you that same thing. It's not going to be accurate, right? I mean, yes, it's nice to hear what you want to hear, but I'd rather give you the truth. I was like, I don't want to see you waste the money. I understand if you want to try and take a stab at that and see what happens, but should anything change, I'm here if you need it. I'm not going to put my reputation on the line just to make somebody happy. I'm going to give the facts of everything and say, hey, this is how it's going. This is what we have here. It is what it is.
Yeah, that's why you got those reviews on your website. You can go check it out. Both of you guys want to plug it. You guys can find your reviews at.
You can jump it on Zillow and just type in Nick Principe. Google Nick Principe loan officer. You'll see a bunch on there.
Yeah, I know John, same thing. Zillow and.
So if you need to get in touch with me, my contact card is actually jonathanbolano.com. The name's right down there. So boom, plug that into your phone, Safari or your web browser, whatever it is, and my contact card will pop up. Hit save contact, follow the instructions. Don't just hit got it, just because if you have an iPhone, it's a little bit quirky. If you're an Android user, bang. It'll be easy for you, but right there is all my info. You can get my reviews. You can go check out properties in Rhode Island, Mass, and Connecticut, and you can also get my phone number, email, etc.
Yeah, so that's where you can find those good reviews. What are some tips and tricks to avoid the bad lenders, Nick? Like, what would what distinguishes you having those good reviews on your sites compared to the other ones where, like, what should they avoid? Someone who's, what are some red flags for some bad mortgage lenders? John can answer
if they start the conversation by saying, I've been doing this for 20 years, it's always a huge red flag that something's about to go wrong.
Oh, just trust me. I've been doing this for 20 years.
My response to that, whenever I hear that, I was like, well, look, my mom's been driving a car for 30+ years. She's still not that good at it.
Sorry, that's big facts.
In the mic.
Yeah.
Wait, I got number two too. When they say I got the best rates.
Yeah, best rates or lowest rates means low service.
Sorry, I'm taking your question.
There we go.
That's what you should be thinking when you hear that.
Yeah, so that's not to say that a low rate is a bad thing.
Right.
If, for example, if I give you a rate, if you go and talk to 10 different people, you'll probably find 5 different people higher, 5 different people lower, and you'll get different levels of service with all of that. I mean, for the most part, all of us lenders, we're all competing in the same space. We have the same rates. Typically, if someone's significantly less than another lender, there's a reason for it.
Mm-hmm.
What would those reasons be?
They're just running real skinny. If you want to close on a house in 30 days, and that's what your contract says and what you have to do, it's like, well, you're probably closing in 6 months because they just don't have the operating capacity to make that happen. So that's why it's kind of, you almost get what you pay for in a sense. But again, there's nothing wrong with the lowest rate, and there's an appropriate time to take that, specifically in a refinance when you're not up against a contract deadline. But in a purchase, you got to be cognizant of that kind of stuff.
Mm-hmm.
Because the seller might get annoyed. You know what? I'm backing out of this deal to do something different, right?
Not only back out, but like keep your deposit that you gave them. I mean, in some scenarios you can get sued. So it's a real estate contract. It's a legal binding contract. You're signing on the dotted line saying after XYZ contingency, you're going to execute on this contract you sign and close on December 30th, whatever that date is. And if you don't, there's repercussions that can happen with it.
So I've been in the industry for 20 years. I got you the best rates. Anything else these people should be watching out and scared of when they talk to these mortgage lenders or running to the left?
So, I mean, like if someone who says that, right, it's not automatic like, oh man, they're no good, I got to stay away. It's kind of, it's hit or miss, right? And it could just be a bad sales pitch on their end. But, there is value in the experience, but if those two are the only kind of pros you have to give to a transaction, then might be a red flag. The biggest thing that I would say is, communication, right? If you can't get a hold of somebody, if, there's just total, you're confused because they're not relaying information properly, communication, I'd say, is the number one red flag that I would look out for. If you can't get somebody on the phone, if they can't accurately explain things to you so that you can understand it, because I do mortgages every day. Someone buying their first house, it's their first time doing it. They don't know all the terms and numbers that we're looking at. So communication is key.
100%.
So, John, you're a real estate agent. You said you kind of talk to John most of the time firsthand, like the new interested clients of buying and getting into real estate. So I'll let, you can answer after John, but John, why would you refer someone to Nick as the mortgage lender?
Because when Nick puts his name on it and he puts that Princeton mortgage name on it, that's closing. And he's going to hit his dates. And the only way that thing falls apart or has any hiccups is if the buyer does something against his recommendations or the realtors. But other than that, I don't think I've ever had a loan not close with you. The communication's on point. He follows up every single week. He does all his due diligence up front. He's proactive. And it's just perfect.
Hearing that from John, Nick, how do you differentiate yourself as, you said there's a whole bunch of mortgage lenders out there. Why should people look into you and the Princeton mortgage?
Yeah, so I mean, all of us mortgage lenders, right? For the most part, we do the same stuff. So the analogy I use is most companies, it's the same bottle of wine with a different label on it, and kind of what differentiates is the ingredients within that wine that kind of make it taste a little bit different. The biggest thing as to what I do for the realtor partners is be actively communicate with them. If I say something's going to happen, it's got to happen. Got to be able to set clear expectations, and most importantly, I'm going to try to make that realtor look good to the client for referring them to me, so that that client then has a referable experience, and when their sibling, friend, coworker, whenever wants to buy a house, they think of, oh, John and Nick, they did an excellent job for me. Let's set you up with them. So it's really just making the real estate partners look good, executing on your word, and just having A+ communication.
Love to hear it. Do you guys ever feel like you're wasting time with someone? It's like someone's nervous to get into the real estate space and they're just inquiring, but they never execute and they don't end up doing that. Do you think it's a waste of time, or everything happens for a reason? They may come back to you, like saying like give them that A+ experience. Do you ever feel like sometimes there's just that wasted conversation or anything like that?
I don't think so. I mean, everybody's at their own pace. I mean, it's not like you're going out and buying, where are we going for dinner tonight, right? And maybe you want to go to the nice steakhouse, or you want to go to Applebee's. It's I mean, you're spending hundreds of thousands of dollars. It's the polar opposite.
Applebee's, thanks.
It's a big investment, right? So it's not easy to sign your name and say, yeah, I'm going to take on $300,000 of debt for the next 30 years, and I'm really going to pay $550,000 when it's all said and done. So I mean, you want to be comfortable with what you're doing, and that might take one conversation. It might take 15. It might take 20. Whatever that is. I mean, it's the nature of the beast. It's our job to just really educate in a sense.
I'm going to add to that. That's technically what I call an objection. if someone's not making that next step. And the way I look at it, this is my personal opinion, is that that's on me as a realtor, because as a realtor, my job is to well inform. And if I'm properly informing them about what they're, or let's go backwards a little bit. If I'm asking the right questions to get to the bottom of their why and what's holding them back or what their mindset is about purchasing this home, getting to those details of like what those fears are and applying some light to it, some knowledge, then they're capable of actually making a decision to say, okay, I'm ready, or no, I'm not ready, versus being flaky and being in and out and not actually ever truly committing. So I don't see it as a waste of time. I just see it as something that I need to perfect myself in order to better aid folks in the purchase of a home or in the sale of their home or whatever it is that they're looking to do.
Talking about fears, what do you think would be, some of the top fears you run into, Nick?
Something we alluded to earlier, or a couple things really, right? The just cash needed on a transaction, right? So a lot of people think it's just down payment. You also have closing costs as well. Nowadays where taxes are and interest rates are, I mean, that could, be an extra 10 grand on a transaction. Depending on the state you're buying in, it could be, an extra 20 grand.
That's crazy.
So it's, do I have enough in the bank? What is the market going to do? A lot of people are still hung up on what happened 15 years ago in 2007, and they're like, is there going to be another crash? And if I buy this house for $400,000, is it going to be worth $200,000 tomorrow? There's a handful of things, but again, it comes down to, it's that big decision. You got to be comfortable with it. We got to educate them enough and, eliminate their obstacles to be comfortable in that decision.
So those fears, do you have any more fears you think you hear running into, Bolano?
No, I think that's pretty much the brunt of them. It's really just a lot of the being scared. A lot of folks don't feel like they're capable. Like they, so a lot of folks, when they go to buy a home, they're like, what happens if something goes wrong? What happens if the blinds fall off? To some people, and literally someone that I actually spoke to 3 days ago, I was at a showing, and I can't remember what they mentioned, but it had to do something with like the blinds. I said, well, what happens if those fall? How much is that going to cost me if that falls? And that's such, to me, a simple answer, because it costs you almost nothing. You get a screwdriver and you just screw everything back in, and you plop them back in, you close all the latches, and you're good to go. But to this person, it was this huge feat that they had to overcome. And if you look at that and then compare it to plumbing issues and a furnace issue and such, it can get really, really like scary. But what we offer as a team is we offer solutions to all that. So when you go and purchase a home, or when you're going to go and do this, it's, hey, you're not leaving us after you close. You're stuck with us for life. This is a relationship for life. So when I had someone call me and they said, my fire alarm won't stop making beeping noises. What do I do?
Oh my God. On Saturday, that happened to me, and it pissed me off. Bro, I came home.
It really struck a nerve.
Did you call John?
I called. That was me. That was me. John, what the hell is happening here? This shit won't shut up. Luckily, I was home alone, so I wasn't making a ruckus, but I was by myself. It literally pissed me off. I figured it out. I had to
sideways.
I had to YouTube University this thing. I had to literally destroy this smoke detector.
What happened?
Dude, it literally wouldn't stop. I'm like,
new batteries and all?
No, it was one of the kiddie ones where there's no battery. You have to like literally turn the knob to off, and then it breaks the entire thing. I'm all right, cool. Finally, that's why on my table out there's the kit for my drill kit. I literally had to break it open. I'm like, finally, it's done. I lay down. I'm not even joking. Like literally, like 10 minutes later, it's like. It's kind of like dying, but still making the noise. I'm like, yo, you fucking serious? Literally came back, had to get wire clippers and cut the wires and break the freaking smoke detector. It was literally like a movie. It was like a scene out of Curb Your Enthusiasm. It was absurd.
It sounds nuts.
It pissed me off.
Did you call the giraffe to come help?
Yes, my giraffe definitely came through and stomped on it for me. And then it finally stopped after like literally this was like an hour and a half saga. It literally pissed me off. I should have went out that night. I didn't, and then I just stuck
it in the leg.
This was on Saturday?
I should have. Yes, it was on Saturday. It pissed me off.
This is the day right after your birthday.
Yes, and I was
bad day to have it.
Were you recovered by then?
Oh, he's like,
That's why
I was recovering the next morning.
He was
Yeah.
hungover.
Oh,
He's sitting there trying to figure this thing out.
literally though, so like that literally happened to me, and I'm pretty familiar with like construction. At least can figure stuff out. So that could be a humongous feat to someone who's dealing with blinds. At least I can deal with the blinds. So like back to your example,
Right.
people can't deal with blinds. They're dealing with that. They might think it's a big feat. They call you, hey, what's up, Bolano? You have not, you haven't forgot about them. They haven't forgot about you. They call you, and how does it go from there?
And then I just figure I show up and I figure out what's going on, and then I either help them fix it or I'll point them in the right direction once I fully understand, because some people don't know how to communicate what's actually going on. Oh my God, my blinds fell down, the wall's all screwed up, and blah 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 blah. They make it sound like somebody just crashed through their damn wall with a baby giraffe.
Like a Kool-Aid guy, the Kool-Aid dude.
Yes.
Yeah.
And really all that happened was one of the little latches fell off and they just got to like plug them back on, but they didn't. So it's all simple stuff. But if you come and put eyes on it, you can figure it out and boom. But that's ultimately like one of the big concerns that I get is people don't feel like they can do it. They feel like it's such a big project to take on. Yeah. I have kids. I'm also trying to go to school and blah, 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 blah. Truth of the matter is that owning your home is actually 40 times easier than being in a rental property, because in a rental property, you got to call your landlord.
And that motherfucker probably don't know shit either.
Do they show up? Do they fix it properly?
Yeah.
And then are they going to increase your rent afterwards because of it? You're living in someone else's houses at the end of the day, someone else's house at the end of the day. And therefore it's like, you don't really have that power, but at your own place, yeah, it costs you a little bit, but at least you have a quick solution. We've saved you money by the way that we handle things, and you have money in the bank. So that way we can take care of things like that.
Yeah. I mean, keep talking about costs. You said the biggest thing that you've dealt with is people having the money for that. Is there programs that, well, I know there is, but it's a segue in for you that can help out a first-time home buyer? I have a lot of friends who are still renting, and I try to tell them about the first-time home buyers program, and they never even heard about it. So first-time home buyers, for people who have still renting, tuning into this, Nick, how can you help those first-time home buyers out?
Yeah, so I mean, there's a number of programs available. Even if you're looking to buy a multifamily, and you want to get that first investment under your belt, live in, let's say you're buying a 2-unit, live in the first floor, rent out the second, or 3-family, live in the third, rent out the first 2, or just a single family, have a little place of your own. I mean, there's a handful of options to get your down payment covered, your closing costs covered. I mean, there's been many scenarios where at the closing table, the buyers are actually walking away with a check instead of actually bringing one. So there's a dozen of them out there. I mean, we even have programs like down payment assistance programs for people who are not first-time home buyers, and it could be someone who's not going to get as much money as they thought they would on the sale of their home. It's like, okay, well, we have assistance for that too. So if like lack of assets is the one thing stopping you, there's typically a solution for that, and it's just a matter of figuring out what works for you.
So the most popular one has to be the Rhode Island first-time home buyers at this moment, right?
Yeah, specifically in our area, absolutely. I mean, I think like right now we have like 8 of those going right now, so it's very, very popular. So
are you telling people about those programs, or are they coming to you with those programs? Like, do they need to know that first off, or are you helping them out in that scenario?
So kind of like my conversation day one, right? Let's say John refers me Joe buyer, right? I'll be like, hey, Joe, this whole process starts off with a pre-approval. It's an online application. It's going to collect like your personal information, address history, work history. It'll allow me to pull credit. Once we have that, we'll collect some documents, those W-2s and pay stubs that we alluded to earlier. And then we'll go through, what your qualifying amount is, what programs you qualify for, whether or not they need them, and that could be like just if they're putting money down, if they're not putting money down, and then what each one of those programs is going to look like to them from a financial perspective, monthly payment, out-of-pocket expenses. But we lay out all options on the table so that they heard it from us, and it's not like after they buy the house they're chatting with their friend, having coffee, and they're like, oh, well, my loan officer told me this, and I was like, well, Nick didn't tell me that. So we try to give all the options, and then make our recommendation, and allow them to make an educated decision.
So I'm first time home buyer Joe Schmo F over here, and I reached out to Nick, and this is my first time buying a home. I'm interested in buying an investment property. I do qualify for first time home buyers. So first time home buyers in Rhode Island, what's that entail for those who are interested? Because you did say that you are in Rhode Island and Princeton. So it's my first time home buyers. I say I get pre-approved for 300,000. We know what's that look like for someone who gets pre-approved for 300,000, and just to make it easier, I do buy a home that is 300,000. So what, can you think about that off the top of your head right now?
Yeah.
Or
So there's two programs right now through Rhode Island Housing. One is it's called the 10K DPA. So pretty much what they're going to do is give you $10,000 towards your down payment. The down payment requirement of that loan is 3.5%. So that $300,000 purchase, that's going to be a down payment requirement of $11,500. So you're getting $10,000 in assistance, requirements $11,500. So you just got to pay that $1,500 difference. And then that $10,000, it's not free money, but it gets paid back whenever you sell the house or refinance it. So in essence, what you're doing is you're taking that 10 grand and deferring it, but it's a great way to get into a house if you don't have the assets available to do it right now. Another option is you'll get 6% of the purchase price up to $15,000 in assistance. However, this assistance portion is paid back over the course of a 15-year loan, and it's a secondary lien to your 30-year mortgage, which is going to be the bulk of the purchase. But you'll have this 15-year loan. Let's say it's at $15,000, and that's going to help you out with both. Can help out with both your down payment and closing costs. So there's options for just about any scenario out there.
so why would you pick one over the other?
One could be credit score requirements. So that 10,000 program has a 660 minimum credit score. The 15,000 has a 620 minimum credit score. It could be house type that you're picking one over the other. So if you're buying a 3 or a 4 family, if you need the down payment covered, you'd only be able to use the 10,000. And it could just be personal situation, right? Maybe the 15,000 is needed more than the 10,000, and you'd rather take on that payment so that you can get that extra cash to help out with everything.
So when you're hearing those scenarios, John, does that dictate what you're doing differently on the real estate agent side?
Yeah, definitely. Because
You gave a hard so.
yeah, I mean, so depending on their finance, so there's a lot of different factors that come in here. We're talking about two simple topics that have a multitude or an array of different things that could be occurring on a financial level for this client. Maybe they are strapped for cash and they don't care and they want to get in a house no matter what, and they don't have money to go and fix anything in the house. Well, then now we're focusing our search on properties that don't need any work, that may need minor cosmetics, if anything at all. It's like plug and play, and boom. But maybe on the other side, it's just somebody that just doesn't want to bring all their cash to closing, and they'd rather keep their $15,000, $20,000 flat in the bank, kick the ball down the road, or the can down the road, and take care of those payments when they build in equity, because they're planning on being in the house for 20 to 30 years anyways. So with the way the market is in the US, the market always goes back up at some point. But anyways, depending on what their scenario is, will determine how we get to the step number 2. But again, that comes back to how good of an agent I am being at that time, or the agent that you're working with if you're in another state and whatnot. And figuring out what your current situation is, so that way they can set up you for success. The best tailor that's out there is one that remeasures you every single time you go back, not the one that just tries to keep reusing the same sizes, because things change according from person to person. I mean, even almost day to day and month to month. So we have this continuous conversation going with our clients to stay on top of that so they can be successful.
Yeah, love to hear that. So someone like the first-time home buyers. So first-time home buyers, are you able to resell that house, or am I stuck with that house? Like if you're getting that assistance from the first-time home buyers program.
You could buy that house today and sell it tomorrow. Really, all it means is, when is that assistance getting paid back, right? So neither of the loans are forgivable, right? It's not free money. So the $10,000, that's paid back whenever you sell or refinance the house. So essentially, when you go to sell the house, it's a lien getting paid off the same way your primary mortgage is. With the $15,000, if you're selling it before that 15 years are up, same thing, it's just getting paid off. Or if you refinance it. Now, when you refinance it, let's just say they're buying today and rates, let's just call it 6.5%. And then in a year and a half from now, rates are at 4.5%, and they want to refinance, they can. We'll take that assistance loan and roll it into that primary mortgage. So that way they're not paying that assistance funds back out of pocket, but they're still getting the lesser rate based off of the updated market.
Gotcha. So, would you recommend someone though if you're gonna buy that first home buyers? Is that someone like just their preference, or would you recommend buy something that you think you're gonna stay in the rest, at least for the foreseeable future, or is it all on preference?
I mean, no matter which way you slice it, your first house, most likely you're not going to live in there forever, right? Typically, I think the average is someone touches their mortgage once every 5 years, and that could mean refinancing, selling. So I'd say, whatever you're comfortable with today, fine. But life changes, in the course of 1 year, 5 years, 10 years. So, you might have to sell it, you might have to refinance it, you might stay there forever, right? But most likely you're going to refinance within 30 years anyways.
So for the first time, let's finish off at that. I'll touch that real quick too. The first time home buyers, obviously though, so once you use it, you're done. You can't go back to use it again. Or is there some type of
Yes and no. So the definition of a first time home buyer is somebody who hasn't owned their home as their primary residence for the past 3 years. At least that's how Rhode Island Housing defines it, right? So if, let's just say they used the first time home buyer today, they got the $10,000 in assistance, and then in June of next year they go to sell the house, and they're moving to Florida, they're gonna rent for a little bit. So maybe they moved to Florida, right? They sold their house in Rhode Island and they're staying there for a bit. It's been 5 years. They're moving back to Rhode Island now, or anywhere in Florida. And it's like, okay, I want to use the assistance again. So long as they haven't owned something as their primary residence for the past 3 years, they're good.
It's a little, oh, okay, cool. And so, but isn't there also a thing where, say, I use the first time home buyers and I have a girlfriend and the girlfriend lives with me for a certain amount of years. Doesn't her first time home buyers get disqualified?
Girlfriend, no. Wife, yes.
So
Don't get married.
Don't get married to me. So essentially what Nick is trying to say over here. But okay, but what is that just the clause like in the first home buyers for Rhode Island?
Yeah, because I mean, basically, essentially, when you're married, it's now joint asset. So regardless if you're on that mortgage or not, it's you're technically an owner of it. But if it's just a girlfriend, it's not their personal property.
So that's all the questions I have. At least I have on the first time home buyers. John, do you have anything to add to the first time home buyers? Anything you any concerns or things I've missed?
Just an overall disclaimer. If you're listening to this, everybody's situation is different. We are only going over things from a pretty high level. There are some things that we've spoken about that have triggered to me that are going to have tax implications. So make sure that when you're going to start pursuing this, find yourself that trusted realtor. I don't think this is the segue to the end, but just be mindful that you want to find a trusted realtor, you want to find a trusted lender, and even an accountant to have these questions with, have these conversations with, so that way you can get ahead of everything, be proactive, and set yourself up for success early on. So that way that whatever your investment strategy is, if that's what you're looking to do, you understand what's going to happen 2 years on the road, within 2 years, if you buy and sell quickly within 3 months and such. So
right,
that's all. Just quick disclaimer.
For sure. And I want to touch back on the refinance. Why would someone, we kind of got over the first home buyers getting into it as a first time, someone dipping their toes into the real estate world. So they got past that part. People tuning in who've had their home for a little while. Why would someone refinance on their mortgage?
A handful of reasons, right? And it might not even be someone that's had it for a while. Like they could have had it 3 months, 6 months, and it makes sense to refinance. Case in point, right now, right, rates are anywhere from the 6s to 7s, depending on what you're doing. In 2 years from now, rates could be in the 3s or the 4s, and you could save several $100s a month by refinancing. It makes absolute sense. It could be their home has appreciated in value, and they have $100,000, even $20,000 of potential equity to use, and pay off debt or do an improvement or just pad the savings account. They could do that. Or it could be someone who initially bought a house on a 30-year. They've had a large increase in income, and they're like, you know what, I want to switch to a 15-year so that they can pay it off quicker. So there's a number of different ways, kind of like what John said a little bit earlier. Everyone's scenario is different, and it's you got to take it on a case-by-case basis.
But you're saying that everything sounds cool. I'm gonna just come at you from the the average Joe Schmo side. for the most part, especially, I say like someone like my parents, they're not tuning in and, keeping track of the interest rates. How is someone, maintain that, keep up on the news? Like, do you have like tips and tricks or someone? Like, if the interest rates do fall, how am I'm to be honest, I'm looking at every now and then. I'll see it on Twitter every now and then. Like, oh shit, interest rates are high. Interest rates dropped. I don't know. I'm not checking every day. I'm not a person like that. I'm not in the industry. So how does someone, and John answer first because he's hot on the topic.
I'm going to keep going back to the same thing. It's all about repetition. Align yourself with the right lender who you can have these conversations with. You don't need to stay on top of it. If you have a store that you work at and you're the go-to person, I'm not going and keeping track of all this stuff. I'm going to go to you for that because you're the professional. You're the one that knows your stuff. If you're in retail or if you're a fashion designer, I'm not going to sit here and keep up with the fashion if that's not like a hobby of mine or whatever. If that's a hobby, that's another conversation. But if I'm just an average Joe Schmo and I just like that, you can't be in everything. You got to at some point put your trust in the professionals and just know how to, like, leveraging what we were talking about how to interview them. What's the word I'm looking for though? To go through who this person is and determine if this is the right person that you want to work with.
Yeah, definitely interviewing. I know the word you're trying to say, and I'm also blanking on it. But
So, sorry. Go ahead.
No, go ahead.
So I mean, speaking of interest rates, right? So like it's boring to monitor, right? I mean, like it's like most people don't watch stocks, most people don't watch interest rates. I mean, if you're getting it from the news, they're typically like a little bit behind in terms of where they're actually at. But so like at least what I do, once you close, you go into our database and your rate is there, and let's just say it's 6.5%, right? And then we're always monitoring it. And then like once rates drop to 6%, I'll probably reach out and it's like, hey, there's an opportunity to save 0.5% on your mortgage. It looks like they're trending down, so maybe we wait a little bit. Or it's like, hey, rates have plummeted. Let's lock in before they shoot back up. We watch that for you, and we give you the opportunity and say, hey, this is what that might look like, and then take it from there. And then same thing on the home value side. What you say, your home was appraised at this when you first bought the house, and the area has appreciated by X percent. So we're monitoring a lot of that for you to be proactive.
Just for new and returning customers, you're doing that for?
Yeah, anybody who closes a loan.
So you're saying, so my house appreciated by 100,000. How am I looking at? How are you reaching out to people? So say we close on a house together. How are you reaching out to me? Through email, through text, through phone call? How much I'll be looking out for those notifications?
All of the above, probably. Usually you start off with a phone call. I prefer not the face-to-face, but the voice communication versus a text, just saying, hey, you want to save a few bucks or take out a few dollars out of your house. So you start off with a phone call. If you don't pick up, leave your voicemail, send you a follow-up text, and probably an email the following day. But there'll be several forms of communication to get that point across.
Oh man, Nick's reaching out to me again. I just closed with this guy a year ago. He's trying to make more money on me. How do you respond to someone like thinking like that?
So when they're closing initially, I kind of preface it and say, hey, we're going to monitor this stuff, and it looks like if there's an opportunity for you to do something of benefit to you, we'll let you know. You can't please everybody. Some people just won't want it. Some people, kind of look at it as like a,
selling pitch.
Yeah, exactly. So it was like, whether or not you go through with a refinance or a purchase, it's no skin off my back per se, but again, I want you to hear the benefits from me, not from somebody else, and say like, oh, well, why didn't so and so tell me?
Yeah. Yeah. So all that being said, so that was all like your business side of it, Nick. So we kind of talked real quick off camera before we went live. So what brought you into people can know a little bit about your background. So my guy, he is not from Rhode Island. So what brought you to the state of Rhode Island to begin with? Get a little bit of background by yourself first, so you get to know the real Nick.
Yes, sir. So I'm originally from New York. Use that a little bit loosely. I was born in New York. Grew up in Rhode Island. My whole family is originally from New York. But I grew up in Princeton, which is where we're at right now, which my office is. And I grew up in Cranston, went to college in New Jersey. I went to Rutgers, and initially at school, I started off as in chemical engineering, And
Wow, hard left.
hard. Whoa. I started off in chemical engineering, realized I hated chemistry. So I transitioned to computer engineering, and I realized I hated coding.
It's like I don't even know you anymore.
And then
Hey, you guys have the coded thing in your background.
We're both computer engineers.
I don't. So I realized I hated coding. So I was like, all right, you know what? I'm going to go criminal justice. I'll graduate with this degree, and then join on with some law enforcement somewhere, either the state or local level, and ideally have them pay for my law school down the road. So graduated with criminal justice, moved back home, was going in with, doing the interviews and tryouts, things of that nature for several law enforcement agencies. And it got to the point where I was like, well, it's going to take a little bit. I got to make a few bucks. So I got into, I started working as a teller at a local bank. And then that kind of drove my sense to, kind of get into the loan side of it. Again, same thing. I was like, I'll do this to make a few bucks before the police thing works out. And then kind of just worked out. And
It's great because both of your guys' backgrounds, essentially, you guys were like, you know what, I'll make a quick few bucks on the side,
Right.
and then both turned into careers. Seems like John, you were itching to say something.
Oh no, I'm good.
Oh,
I'm
it's
good.
like yeah. So you're both. So you guys are both. Let's make some quick bucks, and then what tickled like your? Because it seemed like you did a couple of things. So like, what tickled your fancy to keep pursuing with the the mortgage loan side of things? So what was the that moment that came over you?
It's just it's a different animal than your typical job, right? So it's kind of like it's full commission. So that's the inherent motivator. It's like I could sit at my desk and do nothing, or sit at home and watch TV, but it's kind of like you're your own business in a sense within the business. So it's on you to make it happen, and I like that coming on to me, and having that drive to do it. And then it's also it's a rewarding job in the sense that you're out there, you're helping people, and you're working with great people within the field. It's top to bottom, I love it.
Yeah, working with great people. So just come up with a story on how you two met. So I don't even know the story. So you two, John and my guy Nick. So how did you guys come about with each other, meeting each other in the first place and connecting? And
We met on a really pretty prairie out in the middle of Lincoln one day.
Like you took him on a date?
No, how was it started? I can't remember who connected us.
Riley. So
yes,
a mutual a friend of ours pretty much it said to John, is like, hey, you should, I was hosting an event.
We were both brand new at the time.
Yeah. So I started in March of 17. This might have been in, I don't know, May, June, July, something like that.
Later in the year, like August.
Yeah. And our mutual friend said, hey, John, you should go to this event and just, meet Nick, shake hands. And then, event was winding down. I see this guy walking in. I was like, oh man, we were just getting ready to leave. He's coming in. So
Spanish people time.
So, we connected, and then, had some level of business to begin. And then we kind of drifted apart for several years. And then same thing, I was hosting another event last year, like early last year or summer of last year, reconnected, and we kind of both realized, hey, we both grown quite a bit from 2017 to at that point 2021, and thought it made sense to drive business further together.
Damn, sounds like a love story that I need. Where's my girlfriend's at? Like that, Jesus. That sounds like no, it's crazy because when things come about, you hit off with someone, you definitely know how it feels. Like you guys are both on the same mindset, both on the same career trajectory. And I've had a couple high school athletes on, and I talk to them. I tell them, whenever there's networking events, just go to it. You never know who you're gonna meet. What are you better off? What are you doing at that moment in time than doing that? What are you at home, like you said last time, on watching Netflix, binging, having some chips on your stomach, eating some ice cream? What are you doing instead of that? When they have those events of networking, definitely go see them at those at the halls. Any type of networking event, you never know who you're gonna meet there, career-wise, relationship-wise, with a girl, with a guy. You just never know who you may meet.
Your network is your net worth. The people that are in your circle are the ones that can help you start businesses, are the ones that can help you push you in the right directions to do things. You never know who's going to have that little nugget of information. Like we spoke about the other day. I mean, last time I was on, We have all the same opportunities flying right by us. We sitting right next to us. I didn't even know that Nick was a chemical engineer or a computer engineer, but it's interesting. And these little things, sometimes you find those connections with certain folks, and this could branch into something much larger later on in life, and you never know. Sometimes these people even look homeless. And you want to make sure that you treat everybody equally, treat everybody right, the same way that you would want to be treated. Because again, you never know what's going to come back around to you, and you're going to all of a sudden realize, hey, I can help this person, or they can help you. So
Totally.
Yeah, I'm sure, as a mortgage lender, you can never judge a book by its cover because you never know, especially as a real estate agent. These people can come in wearing sweats. This guy can come in wearing a full suit. A guy wearing literally a girl guy wearing who knows, but you never know. You can never judge a book by its cover, and I think that's one thing. I've never done, because you never know.
what someone's capable of.
Yeah, what someone's capable of, and yeah, no, for sure. I definitely agree with that. And when you guys meet off each other, it seems you guys have been connecting lately. Do you have anything, any closing words from my guy Nick, John? And then you want to say to him anything you want to say to the viewers watching about my guy Nick?
So
Man,
there's so much to them say. I'm trying to
We got all the time. We all the time.
solidify it.
Put it in the reel. Let's get it.
So when it comes to working with a lender, like I've said, and I'm gonna again go to repeat, you need to work with somebody that's going to be communicating properly, that's proactive, and that's going to get you answers the way that you need to hear them. Nick is all of that, and he's there to help you out with everything. So, for example, for myself as a realtor, I need someone that's going to contact these clients when I get a new buyer in, because I look at my level of service and what that means to me, and I need to associate and align myself with people that have the same level of service. And so when I get a buyer, I try to be like on top of all my text messages, on top of my calls, do my best to contact at least within 3 hours. And that's my goal at any given day. And so when I was looking for somebody, I needed someone that had that same mindset. When I send Nick a lead, within 5 minutes to 10 minutes, at least an email comes back and says, hey, I got this. I'm going to contact you a little bit later, so that way, da-da-da. Or he'll go, hey, I got this, house tomorrow after 12 p.m. Can we align and set up a meeting for then for like 15 minutes? And that level of service just says so much right off the bat, because that's just how the whole entire process is handled from there on out. So if you're looking for a lender, someone that's going to look out for you, someone that's going to pay attention to what your needs and your wants are, that's a great choice right there. That guy over there.
Yeah. Tune in, tap in, follow him on all his social medias. It's right there underneath him, and right here as well. Or right here as well. And how about you, Nick, to my guy John? Anything you want to say to the viewers tuning in who's looking for a real estate agent, or for John as himself as a guy in general?
Yeah, so I mean, there's a million agents to pick from, right? And depending on which one you choose, your home buying experience and home search experience is going to be. It can be great. It can be terrible. Everybody who I've worked with John, they've had nothing but good things to say. And John was kind of like, at least in our area, in the forefront with social media marketing and branding himself and helping buyers like on the selling side, sellers on the selling side promote their listing. So he just kind of gives you that next level of service from on both the buying and selling side. He and his team are always going to be available for you with whatever you need, and his level of communication and dedication to his clients and making sure they're getting the home they want or they're getting the price they need on their sale. It's he hits it out of the park from both ends. I mean, he's a great guy to have in your corner in the real estate world when you need it.
Yeah, no, for sure. I can say that I've worked firsthand with both of my guys to my left and my right. And, I can attest to what they're saying. Definitely always a level of professionalism and friendship there. Ask John that the first podcast. And definitely if you're coming to the table with professionalism and you can distinguish the two, definitely, good people to get in touch with, because there's a lot of people who don't have that, that goodness in the back of their head, and they want the best for you, both professionally and as a friend. So definitely tap in. I know a couple people who worked with both of them, and I've known, and they told me the same thing in return. So definitely tap into my guys and tap into right here. You want to give a last to the crowd, to the real people, the Bolano team on Instagram and JonathanBolano.com. Let's get it, baby, right there.
Go right there.
Right
Boom.
there. And to my guy, Nick, right here. You want to give a shout out to your stuff right here? I can't see that far.
Yes. So my IG is nick.principe.loans. Not too active on there, but it's more so my Facebook, Nick Principe, or, just Google Nick Principe Loan Officer. You'll get me on there. Cell phone is 401-862-5110.
I don't think they had their phones out for that one. Get your phones out. Get your phones out.
Here we go. Ready?
Wait, we got one more
Replay.
sitting in the back. The draft's confusing them. Just there you go. There you go.
401-862-5110.
Bang.
Tap in. If any questions, definitely reach out to my guy. He'll answer immediately or he'll get back to you. Leave a voicemail. He will definitely reach out. And
Never leave me a voicemail. Just text me.
honestly, me too. I would not check that voicemail. I have a million voicemails I never check. And tap in. Make sure you have any questions from my guys. Reach out to him. Reach out to John. Get connected with both of them. If you have any questions in the real estate game, we got a little bit into Nick's personal life. Maybe he'll be back for a part 2. We can get into more details. We can talk about the Giants and the Dolphins' potential Super Bowl.
I don't know.
Maybe the Dolphins. I don't know about the Giants.
Yeah, Dolphins. I don't know about Giants.
Yeah, we can get into a whole sports podcast. Maybe they get Odell Beckham. Maybe they don't. They're probably not going to get him.
Probably not.
Cowboys are probably going to get him.
It's going downhill.
Definitely going downhill. We'll get tuned into that for the next part 2 of the podcast. My guy, Nick. Make sure you tune in. And I appreciate all the listeners on every podcast platform, Spotify, Apple Podcasts, YouTube, subscribe, like, get that 5-star review. I appreciate everything. Make sure you follow me at my Instagram and all social media as well. Explore F and EG Part of Thunder S. Get it, baby. Send us to the moon.